Welcome to Dad's DeFi Space and our Saturday live stream. I'm Kevin, and I'm glad you decided to spend some time with me today. Please like and subscribe to Dad's DeFi Space. Today, we're going to be examining the 5 rules of keeping profit in crypto. Now, we're going to cover this towards the end of the stream when I will take some altcoins or liquidity pool suggestions or answer anybody's questions. Please try to stay on till the end of the stream and smash that like button and subscribe to our channel. Now, today we're going to dive into DeFi smart contract hacks and vulnerabilities. It's something that I think is a great discussion if you're participating in liquidity pools. ETH outflows with the ETF and how they compared to Bitcoin ETF outflows when it first began. And then I have a couple things I want to discuss from Bitcoin Nashville. We're going to look at RFK's Bitcoin reserve asset proposal. We're going to discuss how the Democrats are trying to pivot. And we're also going to discuss Donald Trump's keynote speech tonight. Now, before we begin, and before we start to look at the market today, we're going to look at Bitcoin dominance. We're going to look at the total crypto market cap, and I'll probably look at Bitcoin and ETH charts today. But I would like to take some time. Please support the channel and support some of our affiliate links. I love TradingView, so I have affiliate links for TradingView, Coin Ledger for crypto taxes, and Tangem Wallet is how I keep most of my cryptocurrencies secure. So enough about that. We're not going to talk about that anymore. But I want to get into Bitcoin dominance and price action today. If we look at the crypto bubbles, you can see that on the day, this is what we're looking like. Everything today is kind of back and forth, trading sideways, but over the week we are down. All right, we're down a lot. So what I wanted to do is take some time and talk about why are our altcoins dropping so much. Today, oh excuse me. Today we're going to be looking at Bitcoin dominance. This is the Bitcoin dominance chart on TradingView. I have kind of labeled a couple support and resistance regions. I made them very wide just because I want to look at this conservatively. And then I also have the bull market support band indicator and the stochastic RSI indicator on the chart. Now, this is the Bitcoin dominance weekly chart. And right now, Bitcoin is in control. If you were to look at the altcoin season index, you would already have known this because we're in Bitcoin season. We are at 16 right now. Altcoin season is way on the other side. Going back to our Bitcoin dominance chart, ladies and gentlemen, and yes, I know that most of the people who find this channel are men, but I do believe we need more women in the crypto space. So welcome if you ever find our channel, and I hope that both men and women can grow with their DeFi and crypto investing. Now, Bitcoin dominance has been on a tear since the end of last bull run. When I look at this chart, I've noticed that, well, when I looked at the chart yesterday, blue had not crossed over yet, but it has now. So looking at the stochastic RSI, I'm a little weary just because I'm expecting Bitcoin dominance to climb just a little bit higher. But I do want to make everyone aware that I do not expect Bitcoin dominance to get all the way up to 60%. Close, but probably not all the way there. Now it could, and I may be wrong, but either way, it sitting at 56.5% right now. Between 56 up to the range of 60%, we it's starting to be a good time that we can reposition our portfolios, maybe go a little ETH heavy, maybe start to load up on altcoins that have strong charts and fundamentals, or strong technicals and fundamentals. And that's kind of like what we need to be looking at right now. Next, what I would like to look at is Ethereum. This is our Ethereum chart. We are still within this channel, just building up pressure, even after the last huge pump around May 20th, around that time period. We still stayed within this trend range. Now, once ETH breaks out of this range and we are hitting all-time highs again, which right now that would be, if we break this $4,100 range, we're going to be in price discovery. A lot of people right now are talking very bad about Ethereum. Now, I agree. Ethereum can be an old dinosaur, slightly older technology. The high fees, but some of the layer 2 solutions are not that bad. I have many of my liquidity pools on Arbitrum network, and I use the Base network a lot. I like Base as much as I like the Solana network. And I believe that with on-chain summer going on now, and us slowly getting into that parabolic top part of the bull run, yes, we could easily still have 6 to more months left. I'm comfortable that Ethereum is still going to rise during this bull run. So don't listen to these people that are telling you, hey, ETH is old, it's all Solana now, it's going to drop. Because there's more than likely too many people in the crypto space with large ETH bags of big OGs in this space who aren't going to just simply let it go. In the near term with ETH, I have no earthly clue where this is going. We could easily get as low as 2,800 over the next little bit, or we could go as high as 3,600. But I do want to talk about some fundamental stuff real quick before we get into some of the DeFi hacks and smart contract hack stuff today. Over the first few days of ETF flows within the Grayscale Ethereum ETF, it lost 1.15 billion in the first 3 days of ETF trading. Now, if you were to actually examine these outflows, the new Ethereum ETFs took on a lot of capital. But at the same time, the Ethereum trust from Grayscale has been dumping and dumping and dumping. Maybe a lot of the investors don't like the high fees. I don't know. But what I do know is once that selling pressure is gone, and if that institutional involvement and even retail involvement in the Ethereum ETFs keeps the same or increases in momentum, price is going to go up. Remember what happened with the Bitcoin ETF when it first launched? We dropped 18% in the beginning, but eventually, Bitcoin jumped. And it wasn't just a little jump, it was a large jump. So if you were getting down on your ETH bags, that's not something I would worry about at this moment. Okay? All right. Our next topic, we're going to talk about DeFi and smart contract vulnerabilities. If you are investing in the crypto and in the DeFi markets, and you decide to either lend crypto, use a DEX, bridge, even staking, especially liquid staking, you provide liquidity, you yield farm. All of these processes involve smart contract. Excuse me, all these involve smart contracts. Well, when you involve your cryptocurrencies into smart contracts, no matter the reason, you do expose yourself to the possibility of a hack. Because that contract, as safe as it can be, could be audited, it could be the safest one out there. There's still people probably trying to figure out how are we going to get their money. So I would never put all my capital into one place. I tend to use multiple protocols, multiple blockchains, and multiple wallets. I have some on hot wallets. I have some in cold storage that I don't touch. And then what I put into liquidity pools or lending pools or whatever, or anything that involves smart contracts, I make sure that I'm okay knowing if something like this were to happen, that money's gone. I want to stress this a lot because even when I first got involved in this space, I didn't think about this and I had a couple of major losses. Nothing I couldn't recover from. But I've seen too many people in this space put all their money in, put all their eggs in one basket, and suffer for it. There was another dad in not my neighborhood, but the same community last cycle, had over $250,000 put into FTX. What happened? The exchange went bankrupt because they were doing fugazi with people's money. He lost his marriage over that. He was in a bad spot. If anyone is out there and you are in a bad spot, it will get better. But one of the best things we can do is practice safety to learn how to minimize the risk in this market. And a lot of times the best teacher in our lives is failure, especially when we fail and lose our hard-earned money. Just something to think about. But if you look at this right here, these are some of the smart contracts hacks that happened during the last bull run, okay? And as you can see here, and let's just be honest, that's part of what I want to do with this channel. I mean, yes, we might have some clickbaity thumbnails, but I want you to come here to learn how to safely invest in the crypto markets. But also remember that everything we discuss here, none of it is financial advice. You have to be responsible for your own research. And at the same time, learn from your mistakes. But if we look at this, we see that the majority of the DeFi and smart contract hacks last cycle occurred on the Solana network. We had a lot in BNB, and then the next is actually NFTs and exchanges. So stay away from keeping large amounts on exchanges. Don't keep all of it on hot wallets. Keep your long-term plays into cold storage. And we're going to look into some other methods when we cover the 5 rules of keeping profit in crypto towards the end. Now, the biggest one was a Polygon network hack of $611 million. This was actually called the Poly Network. I'm not going to get into the details. You can, I have links for all my sources and articles in the description. You can look in there, read it yourself, look at the charts yourself. There was a $552 million hack on the Ronin gaming network. That was last cycle when the gaming narrative and earn to play just exploded. I missed that bus, being quite honest. You're not going to win them all in this market. We'll get into that later. Why not the FOMO? Let's see what else we got here. That was one that I knew a lot about. We had the Badger DAO. This was an exploit in a DAO system, a governance. It was for $121 million. And then even like long-term protocols, sometimes this can happen. Compound's been around since the beginning of DeFi. I use Compound occasionally for lending and borrowing. There was a $150 million hack with Compound where users lost their funds. These are just things to consider as you make decisions investing in this market. Now I wanted to take some time to actually look at not just DeFi hacks and how to be safe, because we're going to look at something in a minute where we can go over this in greater detail. But let's talk a little bit about Bitcoin's price movement and the Bitcoin conference, because let's go to the Bitcoin chart. We'll just use Coinbase for this one. Actually, we will use the index, actually. Just give it a second to load in my chart. Hold on one second. We're having a little bit of difficulty loading the chart. So we're going to close that out. And I will use this one instead. There we go. That's what I was looking for. So we're going to zoom in a little bit on this chart. This is Bitcoin's current price, which is sitting at $68,584. Earlier 3 days ago, excuse me, we were sitting at $63,400. This entire pump has been occurring going into the Bitcoin conference. It also wouldn't surprise me if in the near future we have a big dump. But let's wait to see what Trump says tonight. And let's wait and see how the rest of the conference goes down, or what responses are to the conference itself. But I did want to get into one point. I get all of my crypto news from an aggregator called Crypto Panic. I included a link at the bottom of my description. Crypto Panic, and no, this is not any kind of affiliate link for this one. It's just something I really enjoy using. You can put in your portfolio, kind of follow the news with your different coins. I love this, right? But I pulled some of the information about the Bitcoin conference off Crypto Panic. First article is a CoinDesk article. There are Democrats, many Democrats within the American Congress that are pushing Kamala Harris and her campaign to do a big reset on the crypto market. Elizabeth Warren and her crypto army are going to alienate a lot of crypto friendly folks, that even some that I know, from the Democratic Party. And I think they're starting to get scared because there's a lot of money involved in this industry. I think this is a smart thing for the Democrats. Now, and I'm trying not to take a side here. I'll be honest. The last few elections, I've voted Libertarian. I think neither of the parties really have our best interests in mind. Trump hated crypto a while ago. Now he's flip-flopped. Now I do right now think that Trump is going to be better for the crypto industry than any of the other candidates minus RFK Jr. But let's see if the Democrats change their strategy over the next bit of time. So the big variable right now today is what Trump is going to say in his keynote speech tonight. His momentum may increase with the support of the cryptocurrency industry. It's hard to say. But in the big picture, none of this matters to me. Because in the big picture, I still adhere to Bitcoin's 4-year cycle theory. That means we should be topping sometime between if the cycle became left translated, which I don't believe now, and we'll get into what left and right translation is in a future video. If you want to learn more about that, check out Bob Lucas's X or his YouTube channel. I have links to that on my YouTube page. But it would not surprise me if Trump's Bitcoin speech gets a reaction from the crypto market like when Elon Musk spoke about Doge and crypto on Saturday Night Live, kind of close to the top of last cycle. It does make me happy that Bitcoin's being talked about this much within our space, right? But at the same time, I'm worried about our government getting their hands on so much of the hardest asset in the world, the most decentralized asset in the world, and the asset that has shown the most price appreciation in the shortest amount of time. Things to think about. All right. I want to move on to the main part of the stream now. We're going to do a little discussion of the 5 rules to make profit within the crypto space. Okay. So today we're going to be discussing Dad's DeFi space 5 rules of crypto. The 5 ways not just to make profit in this space, but to keep profit in this space. And this is these are strategies that when I was beginning, I struggled with. Some of them I still struggle with to this day. I have them on a piece of paper on the wall right over here to remind me when, excuse me, to remind me when I am at my desk, when I am working, when I am focused. These are the things that I need to be thinking about. So let's get into it. The 5 rules of crypto. The 5 rules of crypto. They include only invest what you can afford to lose. Have a plan. Follow the plan. Take profits. No FOMO. Patience. Do your own research. Use a cold storage device. Keep your crypto safe. Don't keep it on central exchanges or all of it in hot wallets. And don't trust. Verify. Anything in this space could be a scam. Now, what I would like to do is we're going to dive into these in a little bit more detail. So in the crypto space, only invest what you can afford to lose. Too many people take money that they need for their rent, their mortgage. I've heard of stories of people in this space taking HELOCs out on their home and investing 80% of that money into the crypto space on some random meme or some crazy 5,000% liquidity pool, lose all of it. Don't mess up your life trying to get rich quick. Even in this space, patience is key, and we'll talk about that in a minute. Okay? So anything you put into this market, just like anything you would put into the stock market or really real estate, any investment, pretend that the money's gone. It's not there. You'll become more emotionally detached to it, and it'll really help you make sound financial decisions. That's what I do. And remember, none of this is financial advice, but these are the strategies that I use in my DeFi and crypto investing journey. Next, have a plan, follow the plan, and take profits. FOMO kills so many portfolios in this place. You see that coin pump, and we're going to talk about one later. A meme coin, 100x meme coin, is not really a 100x meme coin. I think I made about a 10x on this meme coin. That's more reasonable, honestly. But it's Tucker, which is a meme coin on the Solana network. We'll talk about it in a bit if you stay around for the end of the stream. But I took some of my profits, drove it back into another meme coin. At that time, it was Cane on Sol, and it was a gamble. I knew the money might be all gone, and every bit of it I lost. It would have been much better putting that capital to work in a blue chip liquidity pool, or just keeping that money in stables, or just buying Solana. This market rewards people with patience, and it rewards people who have a plan and who are organized. A lot of times it's better to write it down. This means, when am I going to buy? How often am I going to buy? What are going to be the levels where I stop buying or I start selling? That means we DCA and we ladder in, and we DCA and we ladder out of our positions. This doesn't matter if we're talking about spot, perpetuals, and you're trading futures or options, or if you were investing in liquidity pools or lending protocols. Any of these strategies or positions, patience is key once you've learned the steps and the concepts. The next, do your own research. I can't stress this enough. Don't just go to YouTube. Don't just go to X. Don't just go to Instagram, and especially don't just go to TikTok looking for your investment research. It's a good place to learn strategies, find ideas, find people like me that you can discuss this with, and make more sound decisions. I put a list of things in the description I like to use for my research. This includes things like look into Bitcoin.com, DeFi Llama for DeFi and yield farming, the Fear and Greed Index, the Altcoin Season Index, and TradingView charting and indicators. The TradingView charting and indicators is in the description below. Please use our links and support the channel. That would be awesome. Our next one is you have to learn how to safely store your crypto. Anything that's in a smart contract, anything on a centralized exchange, anything in a hot wallet, whether that's a hot wallet on your phone or computer, that crypto is in danger of being stolen. You also need to make sure to educate yourself. You could bridge incorrectly. You could transfer crypto to the wrong network. People have lost their Ethereum that way many times. I see the comments on YouTube, on Twitter, where people have made those mistakes. I have not made bridging mistakes, but I have made the mistake of sending ETH to the wrong chain. I lost $300 that way. It was supposed to be just a small send over to here. And I rushed, and I just didn't check and double check like I always do. So a quick discussion: Coinbase, Crypto.com, Kraken. These are 3 American crypto exchanges. Crypto exchanges, they do store your cryptocurrency, but your cryptocurrency is not insured. If the exchange goes under, or if crypto got hacked within that exchange, you may or may not get that money or your assets back. Now, these are the 3 most reliable exchanges that I use, and if you would like to use them too, I have links in the description below. If you don't want to use my affiliate links, that is fine too. They still are the ones that I would choose to use, but you get a discount by using any of my links in the description. For my hot wallets, I tend to use Phantom and MetaMask, and then I use Leap Wallet for anything within the Cosmos ecosystem. Anything on a hot wallet or involved in a smart contract off a hot wallet is in danger to being hacked. But if you correctly learn how to use cold storage and hard wallets, this would include Ledger, Tangem, Trezor. I use Tangem, and I occasionally use my Ledger. Tangem is the hard wallet that I think is the best for beginners, and for moderate and even advanced users, right? I think that Tangem is best for everyone. It's easy to use. Your crypto is stored on what looks like a credit card, and then it's that credit card that has the technology that stores your private keys. If you don't even know what private keys are in the crypto space, then you should really second guess your safety, which means you need to go back and you need to learn. But there's all this information on YouTube, on X. And if you go to the right places, you'll find great information to keep you safe. Our final one is in this space: don't trust, verify anything could be a scam. Don't even believe what I'm telling you. I could say, I promise that I'm being honest and everything I say is right. And I truly feel that way. And I can still be wrong. A protocol that I'm experimenting with, and I do a tutorial guide video on my channel, it could get hacked. Just keep yourself safe. Don't invest more than you can lose. Don't trust, verify. Anything could be a scam. Use hard storage, use hard storage devices. Learn to and do your own research in this space. If you do these things and you stay in this space for 4 or more years, nobody loses money. Everybody makes it. The problem is too many people don't follow these rules and they don't take the time to learn. Last market cycle, these were all the exchanges minus Mt. Gox. That was from a long time ago. That failed. You had FTX, which was just Sam Bankman-Fried's scam company. BlockFi, Celsius, and Voyager. I had money in all 4 of these exchanges. I was very lucky that I took the majority of it out before any of these collapses happened. I lost a little bit of money in FTX because I forgot to unconnect my bank account and direct deposit. Same thing happened with Voyager. I was able to get all my money out of Celsius and BlockFi. I was very lucky there. And thanks to doing my own research on X and finding the right channels to follow on YouTube. I have my recommended channels also on my YouTube, so be sure to check those out. Then I have just a couple things that I'm going to look at. Before we get into the altcoins, because we're going to look at Cooker on the Solana network. I want to take a look at the Solana USD chart. We'll just use this. Solana is looking super strong on the daily. We have reclaimed the bull market support band. We had a RSI blue cross here. And which happened Monday, July 22nd. And we have shown strength out of that, especially over the last 2 days. Now, if we take a look at a longer term chart, which I always suggest you should do when you're performing technical analysis on your positions, is to at least go out to the weekly chart. When we see the weekly chart, we see that we've just gotten out of 2 dips. But if you look here, our first dip, we got down to $118. Our second big wick, about 120. Our next, 140. We're on an uptrend. Now we did dip. We got back down to 121. But right now, we are sitting at $181. I'll be honest with you. During this time, there's been tons of trading. And my Solana USD position on Radium has been printing yield right now. That's why I like to at least use some of my crypto to earn passive income, around 15 to 25% of my portfolio. And then take those profits to reinvest back into spot positions or put back into stable coins and just wait until the right time is to buy. That's kind of my strategy right now. But whenever Solana pumps, altcoins on Solana that have the momentum, they're going to pump with it. And they're going to be a beta play. They're going to give you more gains than you're probably going to get with Solana. But they're also going to give you more losses too. So it's something to consider. Now, let's take a look at Tucker. Tucker is the meme coin on the Solana network I really wanted to discuss today. It's sitting at about right under 2 cents right now. And this is on the 4-hour chart. It's looking relatively strong. at the moment. But I want to take a look at some longer charts so we can start discussing meme coins. I want to first look at the weekly. Okay, this is Tucker since it started. It debuted at about 0.0003 cents. And right now we're sitting at 0.02 cents. It's a huge return. Now, when I initially heard about this project, I was able to jump in somewhere around 3 cents. Okay. We rode Tucker all the way up into the 10, 11 cents range. But we took some profit around 7 to 8 cents, and we took some more profit around 10 to 11 cents. Now, the rest we rode. So I was able to take my initial capital out, take a teeny little bit of profit out, and then let the rest ride. Now, what happened after that? The bottom fell out. If I would have held on to my entire position right now, I would be in the negatives. Wouldn't be that far in the negatives, but I lost every bit of my profit, and I'm actually below my principal. Why would we want to play with our capital like that? And if we are, we need to do it with small amounts of our positions. Going back to the 2-hour chart, or excuse me, the 4-hour chart, we can see that if we were to drop below the 7 SMA, that's 7-day, by the way. Simple moving average, if you don't know what SMA is. If we drop below, let's say 0.018 cents, we could have a pretty good dip, because our next part of support is going to fall somewhere between 0.016. These are the kind of things I like to look at and kind of think of my chances, like what's the possibility of the gain, what's the possibility of the risk, and what kind of time frame are we talking about. Now, even if you do this, I would expect that you're not always going to be right. Even if I check the charts, check the news, research off of X individuals and YouTube accounts of people I trust their knowledge, I do that only to make the best decisions, but that doesn't mean we're still going to make bad decisions in this space. So today, I hope you enjoyed this live stream. Please smash that like button and subscribe to our channel. If you're watching this after the stream, welcome. I'm so glad you spent time with us today. And I hope you have a good rest of your weekend. Peace.